Welcome to Trading Lounge and the Gold Silver Report for Friday, July 30th. We'll also look at the DXY, the dollar index, which we're looking at now, and also we'll have a look at the yields as well. So, 4-hour chart, DXY here, we're seeing the move down through here. So we've been looking at in Elliott wave terms as wave 3 over here, with an A wave and a B wave and a C wave here for wave 4. We understood that this whole pattern, this bounce off the medium level 90 here, was corrective because of this first structure here. And we could also see this first structure here in the opposite direction for the Australian dollar, which we've been tracking in the Australian video, which is a mirror opposite to this, and also other things like commodities as well. In terms of copper, we're seeing the inverse of this particular pattern. So we've had a few things to sort of help us along a little bit in terms of this whole thing being a correction. If this first leg is corrective, then all of this is part of the same correction as well. And yeah, so we're starting to see a rise in copper and the Australian dollar that we've just been sort of focusing on. I mean, obviously there's other currencies and commodities as well. But from wave B here to wave C here, as you know, we've been patiently counting our curves and waves up to the top here. And there was a few things here that we could help confirm the top in. One of them was the trading levels, and using 92 here as a retested resistance. Once 92, which is the pivot within group 1, so 90 is the medium level, and then we have 91, 92 and 93, 1, 2, 3 that make up minor group 1. And normally when the market's been toiling above the 93 and it comes back and it finds 92 as the retested resistance, then I know that the market's stuck at that point and will be pulled down to this number here. Now we have to be careful. I just want to talk about that a little bit, because what often happens is that between 92 and 93 there, the next strongest number down here is 91.50. So sometimes what happens is that the market will pop down to 91.50 and then move up from that point. So what we need to see is well, let's just for it to be bearish at 92, we need to see it in very simple terms. If this was 92 across here, we would need to see it come through the 92, which we're seeing now, to retest it and then fail. And when it fails and breaks this previous low here, that means that it's been rejected, and it will continue down at that point there. But a lot of the times it will come down to the halfway mark between 92 and 93, the 91.50 area, and then move up from that point and then find support on this level and then move up. So it's that real tested resistance that we wanted. Obviously this is very simple here. The more complex one is this one, where it comes back above the level here and you think that, well, it's going to be bullish, and then it comes back down again. So you just got to, it takes a bit of experience, a bit of skill and a bit of patience and those things to recognize what's going on at a particular price point, So that's just one little caveat to the downside here. Now, because this all could be up for wave 1 here and back for wave 2. So we'll also need to consider the, I mean, I think there's a top in play. I don't have a real problem with that, but we just don't want to get lost in ourselves. We need to be looking at both sides. So 50 and 60 here, this will be the 61.8%. We're way down here at that point, so I doubt if that's going to make much difference at that point, but still it's nice to know where we are with that. On the intraday here, we have been counting down. I'll still need to do a little bit of work on it, because so from the top here, if you recall, we were looking at this first little 5 waves here and thinking, okay, well, that's promising. We could have a top in play, but we needed to get past the first 5 waves over to here. So because it could be an A wave, a B wave and a C wave over here. It was a little bit messy here, so we could have dragged it down to here. But when it dropped through this low here, I knew that It was over at that time. So we can look at this as wave 1 and 2 here. I may have to lift that up a degree of structure. And then we'll also look at this as 1 and 2. And we'll also look at this as 1 and 2 here as well. And then down for the third wave. So we're in the third of some description. So I'll do some more work over that on the weekend and fill in the gaps there. But this turn in the dollar here makes things interesting. So I just want to come back to maybe the weekly chart here. That might be the go. So just in the bigger picture here, we've looked at this before. I've got this as an A and a B and a C wave up here, right? That means that this low here will be taken out eventually. I know that sounds crazy, but that's what the pattern is telling me. There is a possibility for the upside. The only possibility that I can see would be calling this up for wave 1 with an A, B, C for wave 2 here, and all of this up here as 1 and 2 and 3 and 4 and 5 here. Then that would be wave 1, and this would be the A wave and the B wave and the C wave coming back for wave 2. So it could be that, I'm just looking at if I'm wrong. So from the top here to the bottom to the top here, then that stick there, then it's possible, but it would be down here. This would be the 50-60% retracement level. So in that case, it could be that this is up for wave 1 here, back for wave 2, then up for wave 1 here, an A wave, a B wave, and a C wave here for wave 2 in this box. So we don't need this anymore. We can just get rid of that. So if this was just playing devil's advocate here, this is if this is a C wave coming down here where I've got wave 1 here, because on the bearish side we'll look at all of this as wave 1 and wave 2 here, and then wave 3 coming down. So as this moves here, I can just say to you now that all of this move down here is 1 and 2 and 3 here, and then the A, B, C for the wave 4 that we just talked about. So in this case we'll be coming down, let's just say to 88 here somewhere, right? As that would give us it's normally, well, it's this old low over here as well. So once we get this move coming down through here, that's where gold can run for. But then we've got the problem of, well, we'll have 5 waves from the top down to here. That means that we'll go back up here for an A wave, a B wave, and a C wave. Now it doesn't have to go all the way up there. It might just come back to the wave 4 here and then move down. But what I want to say here is that if this is going to be wave 1 up here with an A and a B and a C wave here, where that wave 1 is, that would be the C wave here, and then we would move up from that point. So I like to keep an open mind about things and track both sides of the market. There will come a point as this moves up here that we will be able to recognize this as an impulsive wave that will continue, or a corrective wave that will fail at some point and it should be quite simple as a wave 2. It should be a 5-3-5 structure, a zigzag. So it should be quite simple, and then we'll come down. So this is probably where gold will come into its own at this point. So it's still got a lot of fluffing around here to do, before we see that move down. So if you wanted to accumulate gold, then it would be good to accumulate it in this wave 2 here for this, while the dollar's in wave 2 here. But while we've been working through this A, B, and C here, and this move coming down through here, well, that would put us in line with having a nice 5 waves up in gold. So that's what we're looking for. That's what we'll play to. I mean, obviously it's quite short here, but gold might range more and all those sorts of things. But anyway, that's where we are with that. With the yields and bonds and things. As you may know, I'm thinking that from all I've done all my big work picture, right? So I still got to do more here. I don't think this little move down here is actually finished yet. It could be, but it looks like there can be another little wave down here. But yeah. I just see still another move to the upside here for wave 4, which will put these yields at, you know, well, closer to, well, anywhere between 2 and 3% up here. Now, I know that that sounds pretty high and all the rest of it, but I think even somebody from the Fed said that they can go that, you know, they're happy for it to go to that point. So yeah, we'll just see. But I need to do some more work on this little move here. So if I just go into maybe the hourly chart with this. Yeah, I was thinking, you know, as a bit hard, not that, I've counted down here, I've done all my homework here, so from the top here, right, from the B wave top here, of wave A, so I've got 1 and 2 and 3 and 4 and 5 here for wave 1, and then 2 here, and then wave 1 and wave 2, and then down for 3 here and 4 here. Yes, it has overlapped over there, but I think it's the best fit for this. And then that will take us down to wave 3 here. So that can be the ABC and it can be finished from that point, or otherwise we'll come down further. Oh, hang on a second. Where are we here? Let me just focus on that. No, that's right. Sorry. Go back again. From the B, this is my A wave top here. So I've got an A wave here, a B wave here. Okay, and then I've got 1, 2, 3, 4, 5 to make 1, because we're looking from B to C, and C will be in 5 waves, so wave 1 and 2 here, and then we've gone down for wave 3 here. So I think we've got an A and a B and a C here for wave 4. That can pull back to the wave 4 1 lesser degree, or 38.2%, so we can take from this top here roughly, you can sort that out a bit later, that's the 38.2% here already. So it's not like it's going to do, because all this looks a bit overlapping and corrective here, so I think that we've got a little push here, and then down from that point. That's what I think. So I think we've got one more little move to come into play here for that. Get rid of that. Yeah, so I still think we've got to come down to that, at least the 50% here. And that can go there as wave C. So I think we've got 3, 4, and 5 here for these yields here. I haven't looked at the bonds on the, what are these? These are 20-year treasuries. So bills, treasuries, and bonds. So yes. So, the 20 years. So when a loan is over 20 years, it's called treasury. So I mean they're all bonds. But yeah. So probably have to go to the 10 yield. So anyway, I won't get into all this now, but I will. Now that I've started this particular topic, I will get through it all. It might even deserve its own video, I think. But anyway, the takeaway here is that coming back to the dollar's pumping down, and you know you're going to see the inverse of all of that with other things. So coming on to gold here. With gold, I'm just tracking 2 counts, as you may know. There's not a big difference between the counts, but they'll just both bullish but slightly sort of different. One is that this is a weekly chart, of course, so we've got wave 4 here, we've got this as wave 1 here and 2 here, and then wave 1 and 2 in here and moving up higher, or we've got this as a triangle pattern here where we've got an A, B, C, D, and E here, and wave 4's over here. So not a big difference, but it'll be kind of a little bit warped, so we need to kind of understand that a little bit better in this. But we are seeing that push up in gold, which is good. Just get rid of a few of these things. Don't need these. So that's sort of it there. So let's just look at the triangle pattern to start with. I think it's on this chart. So a little bit weird, but we're on track here. So this is all the A wave here, the B wave here, the C wave here, the D wave up here, and the E wave here. So what we've been looking for most of this week, there's different ways to count this. I know that's a little bit sort of tricky and ugly here, but it does count quite nicely with an A wave here, with an A and a B and a C wave on this low here for this B wave. If I can just move that, that can go right on that low. We don't need that now. So we're on track here. So the 1850 here is pretty much the 61.8%. It's a tad higher, but that 1850 will play an important part in this here. So this is the triangle pattern, which means that we'll go up to the 1850 and then we're going to come back down in 3 waves here, and then we'll go up and make new highs. We'll go up into 2,200, 2,300, up into group 1 here somewhere, okay, somewhere between 1, 2 and 3 here. So we'll take it in the middle of 2 and we'll see what it looks like as we get there. But that's the triangle pattern, and with the triangle pattern we can take it into 2 hours here. So we'll just finish this off here. Not quite like this actually, so I need to rearrange this a little bit. So that can come over here, that can come here, that can come here. So if you've got this count, then you're sort of on the right track as well. And then we're moving up for 5 waves to the upside. So we talked about being long in all of this, so even in the triangle pattern, so we could be long in there. Yeah, so in a way we're looking for, well, 5 waves up for wave C there. So if I can just borrow these for a moment, copy this as wave 1 here, and copy this as wave 2 here, and it'll be 3. We haven't got to wave 4 yet because it'll stick out like what's the names. And oops the daisy. And wave 5 here, up here for around the 1850 sort of area, which is the next level up. We've got 1, 2 and 3 here as group 1, so we can just copy that and put that there as the 50. And then we've got, of course, the next level up here is 80. But yeah, anyway, so that's where we are there at the moment. So we're counting 5 waves up. We're not there yet, and there will be a bit of a flickering around here at the 30. Sorry, at the 30, because that's the top of group 1. Right, so getting support on top of group 1, as you know, with the classic trading levels pattern, that will set the next target at 50. So that's our count really for this. So we can just tidy this up a little bit. We can look at the intraday in a little bit more detail in a moment, all of this here. But that would be wave D. And then we'll be looking for wave E over here. Okay. Now the thing here is that the other count we're going to have a look at in a moment would be bullish. So that means that if we get a classic trading levels pattern at the 1850 there, something nice and neat and tidy, and so we have the arrival, the reaction, the first high above the level, the ABC pattern, and then we come back up here and get support over here, well then we'll turn to the bullish pattern, because if it was going to be bearish it would come back up to this point here and then drop from that point. So this little pattern in here, this little pattern here, this has got all of this pattern here. All of this pattern here will be in this little area here. So we'll have over here we'll have the arrival, the reaction, the first high above the level, the ABC pattern, and then up. So we'll be able to refine that much more. It's at this point we'll either be going down or going up. So that's what we'll be looking at that point in the game. Okay, so if we are going to be bullish, well then we need to look at the bullish side of the market. And it's like this. So we would look at this as wave 3 here with an ABC for wave 4, and then up for 1 and back for 2, up for 1 and back for 2, and then just keep building. So I don't know if this count is right. I mean, I've never really liked this particular move here for wave 2, but the dollar's going in the right place. Everything seems to be sort of buzzing along nicely, but we still need that 1850 up here for you know, for that support on this. So just on the 4-hour chart here, we're looking at it like this. Next step is to get support on top of group 1. That's really important. So you can expect some squiggles there. It can even come back to 15, but probably in this case 20 at the max, and then push up. So we can take this across here now. And yeah, I mean, if this is going to be bullish, then we'll look at this as wave 1 up here and wave 2 here, something of that nature, you know, and still count 5 waves up here. So we count these up as these little guys here. Wave 3, do we have any more? Oh, we have some over here. We only want the small one, so 4 and 5. So it'll be something like this, but we're going to track this on the intraday anyway, so this is not a big deal. But I do want to move these because I know I'm limited on how much space I can have. Don't really need these for the time being. I've just got to be a bit conservative. So yeah, so if we get support on that particular level, then we'll go up from there. It'll be easy to work through. It'll just require more time than skill to understand what's occurring there. Okay, so not a biggie. You don't really need me for that. You just need to visually see if you've, you know, has the market found that as support or not. But yeah, okay, so that's sort of where we are there. Just this is just the hourly chart here. So this is the other pattern. Well, it's just the same pattern I drew out there, so that's not really going to sort of show us much. But yeah, this little trend in here, I think we need to go to the tick chart for that. And we need some data, so we'll put that in here. So from this low area here, I've got it as 1 and ABC for 2 here. It's probably a little bit questionable, that. Yesterday we talked about being long on each one of these levels, and we'll do the same again at 30 because that's our target here. So we'll be taking, we can copy that, put that there, and we want to be, because we don't know what's happening at the 50, we want to be locking in something when we get there. Okay, so start thinking about that. And I've counted up here a little bit. Let me check. It's 1, 2, 3, 4, 5. So that's not there yet. That's just 5 waves for wave 1, but that does bring wave 4 back a lot at that point, so maybe I've made a mistake somewhere, but let's just, wouldn't be the first time. My life's full of mistakes, but I'm a positive, happy person. Yeah, so be something like that. I will just go back over and check that a little bit, but that will be wave 3. Then you've got to come back for wave 4 after that. So wave 4 can pull back to these guys in here somewhere, or 38.2%. So in a nutshell, we're going to be coming back here and then up there, something like that. That green wave 4, when it comes in, you can of course just grab the wave 2 low here, and wherever that may be up there, you know, and then that will be your 38. So it can come back to that 38.2%. So you'll need to find that. So we'll just drop that down here a little bit further. So I think I've got this sussed here, part of this here. Let's go and have a little bit of a look. So I've got 1, 2, 3, 4, 5 here for 1 and 2. Oh, that doesn't look quite right there. I need to just double check that. That could be my first mistake. That's but that all fits in quite nicely. 1, 2, 3, 1, 2, 3, 4, 5. Just want to check on that. Yep, that's all good. That's 5 waves. That can go there. This can go here or here. I'll put it. It's probably there. So I'm just checking as I'm going. 1, 2, 3, 4. Oh, I've got an extra wave there, but it still doesn't matter. That must be there. Doesn't matter that because it still fits. It's all good. Yeah. So we should have one more little move up here at the 1830. We should get this classic trading levels pattern here, and then the ABC pattern here for this. So it can come back to the 20. So just be a little bit mindful of that. You may want to pick it up back there than up here. You know. So that would be. Let's just shape this up a little bit better then, shall we? So we're going to have that first high above the level that will probably take us to 33 to 34 top. So we'll just move that out, bring that back down here a little bit. We don't need that over here. We can have that here. It will look like a drunken mess once it actually plays out here. But where was that wave 4 here? So we'll taking it to 30, what's almost 34 there. 34 is a fib number, also the 50% retracement level, so that's good. So that brings us back down here and there. So we can go to the fourth wave of 1 lesser degree because it may only come there, or it may come all the way to the 50 here. But what you could do is you could look at the buying in that box. So we could put a green box there and just pump a bit of color into it. So you could buy anywhere in that box if you wanted to add to positions, but I'll just leave that there. Remove that, remove that, and remove that, and remove this, and we're good to go. So, right, yeah, if we're going to buy back in the box there, we don't need that. But if that just comes down here as an A and a B and a C wave here, then obviously you can just draw a line straight through here as well for that, you know, or go long above that top there, or go long above that top there. But basically we want to be getting, you know, this is where we're going to the 50 here, okay? Whatever you decide to take out of there. Now we don't know if we're going to go further up or further down at this point. At the 53 area through 1853. So you may want to keep positions in there because it depends what type of trader you are, that's all. So I won't rabbit on about all of that. But what happens then? We've got 1, 2, 3, 4, and 5. So let's just play this out a little bit. Let's just put wave 5 in here. And I think I'll just go back to another chart here so we get a bit more perspective on something. So maybe the 4-hour chart. Let's just consider this for a moment, see what you'd need to hold in this case. So we're looking at a moving up. So if we take the low here and the low at 50, then the market can pull back down to this here. That's how far it could pull back to as an ABC from here. So we'll put that up there, we'll put that up there, and that there. We're kind of close to that at the moment. So it's quite a long way, isn't it? I don't think it will go back that far. Personally, I think it will be up here on the 30. So I think at max, it will come back to 30 here, and then push up from that point. But at the same time, we don't know, you know, what's going to happen at this point. Will it come back down into here? Because if we look at all of this as the A, the B, and the C wave, let's just go back to one of the other guys here. So that was in 6 hour here. So let's just look at it in the triangle situation for a moment, shall we? So let's assume that from this low and the market goes up to, say, 53, then in the triangle pattern, then it'll come back to here for wave E. And that will be an A wave, B wave, and C wave here. So that's how this will look. It's quite interesting, really, because even if that was up for wave 1 here and back for wave 2, we're still looking down here, do you know, to that point, or to here. So that's a bit, so they're not that different from each other. We just got to see how they play out. Sorry for not talking and entertaining. It's just that I need to think as well. I'm not the I'm not a sort of entertaining loud person. So yeah, well, that's the other side of the coin, folks. What will happen, I'm not quite sure which way we'll go. Do you know what I mean? But they're both quite close in a way. So it doesn't really matter if you're a stacker. It just really matters. It doesn't matter if you're an intraday trader. It just really matters if you're a trend trader trying to get, you know, 10, 20, 30, 40, 50 points sort of thing, you know. So take profit or percentage at least there. I really don't know what to say, because I wouldn't want, you know, you have to make your own decision at this point. When you get to there, I can get you to there, but after that, I don't know. I'll have to wait. So we'll see, you know. We'll see how this plays out at the 50 here. It'll be interesting to see where the 5th wave goes. If it just hits the top there, then it's likely to go back. But if it gives us a classic trading levels pattern with a nice first high above the level here, then that's going to become very interesting at that point for the bullish side. So I don't know, you'll just have to work through it. But definitely, you know, take your piece of cake off the top there. And also I suppose we need to look at a few other things. So silver. There it is. Okay, so I've got a bearish count and a bullish count for silver. I'm not going to go into either of them at the moment. It doesn't make sort of that much difference. The first job that we have to do here is to see if we get 5 waves up. So I was looking at this as 1 and 2 and 3 and 4 and 5 for wave 1 and 2 here. Very much the same as gold. As I should probably lift this up 1 level, and then 1 and 2 and 3 and 4 and 5. So I've been through all of that. This wave 4 should pull back to this wave 4, and we'll see a move to the 26 here in that case. I mean, that's going to be really good, because that's going to give us 5 waves to the upside. So, and that's coming from a low, because you know that we've been tracking this last 5 waves down through here. So having 5 waves here is going to give us a correction at 50-60%. Maybe not. And then another 5 up here. So really, that's telling us that gold will probably go higher as well. So that's a good indicator for that. Okay, I suppose just want to have a look at my trade in here, which is Newcrest. Okay, that's opened a bit higher. This Newcrest Mining, an Australian, you know, we think it's one of the biggest in the world, but that we're not really taking on Russia or China and all that sort of stuff at that point. So, but yeah, it's a big big producer. Because I was sort of concerned we had one more leg down here, because I never had the best 5-wave structure in this particular point here. But anyway, that's not the one I want to have a look at. We want to have a look at GDX for, not because it's important, it's just the fact that that if you were holding gold, well, then you would go for GDX or GDL, probably rather own the shares. Where are we here? We want metals, we want GDX, and we've lifted off the low there. So this was one count that I had here, and I'm a bit dubious about it. So I had this as basically the ABC for wave 2 here. it's hard to work this charting program in a small space because I don't use a full screen to make the video. I've got a much smaller screen, and then when I make the video it looks big at your end, so I've got to work with a very small I can make it a bit bigger at this end, which make it a bit easier, as long as you can see the dates. That's good. Don't really need to see the GDX there and all that sort of stuff, so that opens it up a little bit better. So we could have it like this. Once again, with this one here, I mean, it's a bit of a long shot having this as wave 1 and wave 2 here, but I'm happy to run with that. Let's just get rid of this. What I want to check here is this 50-60% retracement level now from this point. So we can change that now. How do we do that? Flip it up. Not that way. Okay, so that's the other end there. So that's what we have to be concerned with there. Right, so we need to get past, you know, we're going to go up there. We need to get past that now. So we've had this count for a long time, and let's just see how it plays out at this point. I mean, in that it needs to move past, you know, it needs to show us a nice impulse wave to the upside, like 5 waves, which we don't have at the moment. We can look at this as 1 and 2 in here, and then 1 and 2 and 3 and 4 and 5. So we're not finished in here yet, so I won't go in there just yet. But let's see if we get this. Once we get this first impulse wave here, once that's confirmed, then we'll have a retracement here, and then we're going to have another 5 here. But that could just be an ABC to that particular point there, because this is also, you could also look at this as an impulse wave here. So we would have to get past this ABC pattern here at the 61.8% to confirm that we would be going higher from that point. Okay, that's the bottom line for GDX, and I suppose GDL will be pretty much in the same boat there as well for that. But all the same, we're seeing, you know, the dollar push down, so that's all really healthy for these guys, and this was up 2.5%. So yeah, it's good. Let's just see if so the takeaway for this is that we need to see 5 waves up here. We've only got 3 waves up here so far, so it can fail at this particular point. I mean, technically, we could also get rid of that for a moment. We could also look at this here as an A wave here, a B wave here, and a C wave here for 5 waves. That would also work as well. And then come down at this point. So there's a lot at stake here just yet. I mean, the annoying thing is that this wave, well, first of all, this wave 1, 2, 3, 4, 5 here, it looks okay, but this, to get 5 waves out of this little move here, I just couldn't get it. I could only get 3 waves out of it. So that to me would be 1, 2, 3, 4, 5 for the A wave, the B wave, and the C wave there. And then all of this is 5 waves here. And then we come back up for an ABC into the box and drop from that point. But I mean, if the US dollar is going to be pushing down, then, you know, we're going to see this push up. So, you know, maybe I'm wrong. So we'll just go step by step. I'm sorry I don't have a very clear pathway on this, but let's just see how this progresses here. I'm not convinced just yet about this, about the pattern. I know fundamentally with the, you know, US dollar going in that particular direction and everything's looking pretty sort of rosy, but if we end up in that triangle pattern that we're with gold, then we're going to be coming back down here anyway. Do you know what I mean? We'll end up we could come back down here for this before heading off again. That would come down here, and then we would head off at that point. I mean, we could still call this wave 2 over here. We could still call that wave 2 over there. And we could still do that here too. If that just went up in 5 waves, then came down here, that's also still wave 2. within that triangle pattern, you know what I mean? So it could force this out to be even a bit more uglier than we really would like it. But yeah, I don't have any clear answers for this particular one. I mean, GDX to me works like it's not working like an ETF, it's working like a stock. It's just really following Barrick Gold. So when we have a look at Barrick here, and we've been over this before as well, this presents a better situation here. Still don't get the 5 waves up here, but at least here I get an A and a B and a C wave here for this. Yeah, because that's 1, 2, 3, 4, and 5 here for an A wave, B wave, and C wave. Up for 1 here, back for 2 here, going up into wave 3. So it's really GDX is really behaving like ABX. So we'll see. We'll just get to these. Well, let's just go step by step, shall we? So this little move here, in a couple of sessions, that 5 wave structure up here would be finished. So let's see what it looks like after that. Because after this 5 waves, as it comes down here, if we can work out that it's corrective, bullish corrective, then we know that we'll be going higher. But if we just start to see impulse waves down, well, then we'll have to treat this as an A and a B and a C wave up here. So a little bit of work to be done. Like I said, there just wasn't any clear, this one here really bothered me. It just couldn't get 5 waves out of it. The rest of them are okay. Alrighty, I'll leave it at that. Sorry to waffle on so long, but all good. Enjoy the weekend. Cheers.